NI approach means net income approach. NOI approach means net operating income approach. If retention ratio is not given, then what to do? Remember, 100 minus dividend. That is only retention. What is the formula of ARR? Average profit divided by average investment into 100. Hello everyone, this is your Adarsh sir here, lecturing Vidhyaashram First Grade College, the Temple of Excellence. So we are in the last session of your academic, that is nothing but your model paper discussion. And we completed your whole syllabus and now it is a time for just revision what we did. And so your topic is financial management. This video especially for final year BCom and final year BBA. Now, so what about your financial management? What are the syllabus you have? What kind of preparation must be there for your examination, and which are the topics you have to concentrate for your exams? Everything we will discuss in today's session. So your agenda is very simple. We have introduction, blueprint, problems, theory, and finally we have exam corner. These are the topics we are going to cover in today's session. So we have introduction to financial management, time value of money, cost of capital, capital structure, capital budgeting, and dividend decision. These are the topics you have for your examination, and what are the marks allotted for each topic? Each and everything we will discuss step by step. Now, these are your marks allotted, like 10 mark, it will be given 5 out of 5. You are supposed to attend any 3. 5 mark question will be given 6 and you are supposed to attend any 4. And your 15 mark question, they will be given any 3. Out of any 4, you are supposed to attend any 2. These are the marks allotted. If you see your previous question paper, you will not get this kind of marks allocation. Why? Because it is the first scheme of your CBCS, your examination. Earlier it was normal scheme and now we are writing under CBCS scheme. Now, so what you have to prepare for 15 mark, what you have to prepare for 10 mark, and what you have to prepare for 5 mark. Now, for your 15 marks, remember you have to prepare well with capital budgeting. So what is capital budgeting? Under capital budgeting, you will get NPV, net present value, and profitability index, ARR, and you have payback period. This we call it as capital budgeting. Compulsory question for your examination for 15 mark. And what about the second one? The second one is call it as this one, cost of capital. And the third one we call it as your dividend decision. Dividend decision. And one more will be called as theory. So these are the topics you are supposed to prepare for your 15 marks. And what about your 10 mark question? So your 10 mark you are supposed to prepare like, first question will be on capital structure. Your second one will be leverages. And the third one, it is NI approach and NOI approach. NI approach means net income approach. NOI means net operating income approach. Again, I'll repeat. NI approach means net income approach. NOI approach means net operating income approach. Now, once if you're done with this, and the fourth one will be your cost of capital. One more problem you can expect. Fifth one, it will be theory. or else you can get a time value of money. Time value of money, it is a loan amortization, present value, future value. These kind of problems you will get for your 10 mark. And what about your 5 mark question? Now, your 5 mark question will be, one is payback period. PBP means payback period. Small problem they will ask you, or else they may ask you ARR. Accounting rate of return. Out of these two, any one will be asked. Then, after your payback period or accounting rate of return, the second one will be like your cost of capital. One small problem. Like, under cost of capital, they may ask you like, prepare cost of debenture, cost of equity, cost of preference shares. Like this, they will ask you the cost of capital. Then, once if it is done, they may ask you small thing like, there may be chances of leverages may come for 5 mark, and rest of the things are theory, theory and theory. These are the topics which are covered under 5 mark. Clear? This is all about your question paper pattern. 15 mark, 10 mark and 5 mark. These are only expected one. I cannot say that exact one, but 90% of the chances will be these things. Then, so we'll go with your 15 mark, 10 mark, all the questions. See, in this, which are the topics we are going to discuss today? I'll go back to your slide, and we are going to discuss about your capital budgeting, dividend decision, your leverages, then your payback ARR. These things we are going to discuss today. And so in this, we are not discussing time value of money. We are not discussing cost of capital. We are not discussing NI and NOI approach. Please watch videos in that in detail I have gone, because cost of capital and all, it takes much time. But I'll tell you the concept and logics in that. But we'll go in detail for the following details. 15 marks, remember, always go with dividend decision with capital budgeting. The third option will be cost of capital. For 10 marks, always go with capital structure, leverages, NI, NOI, NI, NOI. Please watch YouTube videos. You have 3 to 4 problems on NI and NOI approach. Net income approach, net operating income approach. Now, so first we'll go with your capital structure. Capital structure we are discussing here. MNC Company Limited currently equity capital, shares of 100 each. Management is planning another 25 lakh. So our complete problem is on what value? 25 lakh. I don't go in detail, just I'll give you concept. Now, so 100 is management planning, another 25 lakh. Our complete problem is on 25 lakh. Now, issue 25,000 equity shares, 100 each, 25 debenture, 100 each, 25 preference shares, 100 each. While doing your capital structure, always remember, wherever you have preference shares, we pay them dividend. Wherever we have debentures, we pay them interest. Wherever we have equity shares, nothing to pay, because whatever left out, it will go to equity shareholders. Now, 25,000 into 100, 25 lakh, 25 lakh and 25 lakh. All three individually 25 lakh. Now, what is your EBIT? 8 lakh, tax rate is 50%. What is the format? So, this will come later, and your format is EBIT, option 1, option 2, option 3. First option, the existing equity plus debenture plus preference shares. Now, write down EBIT for everything. Minus, we have debenture, so interest. Interest has to be calculated on what? I'll show you. 6% debenture on 25 lakh. 25,000 into 100, 25. 25 lakh into 6%, how much? 1 lakh 50. Minus, you will get all this. Minus taxation 50%. On this, you have to calculate tax. You got all this value minus what? Dividend. Dividend. Do we have preferences? No. Do we have preferences? No. Do we have preferences? Yes. Now, this 1,50,000 on 25 lakh into what is the percentage? It is also 6%. Now, if you calculate 6%, you got 2,50,000, 3,25,000 and 4 lakh. Up to this, what we got? Earning available to equity shareholder. For this, what we have to do? Divided by number of equity shareholder, you will get EPS. What is that? Earning per share. Your final answer, earning divided by number of equity shareholder. Earning divided by number of equity shareholder. In this, what is your earning you have in this? What is your earning you have in this? Now, your earning is 4 lakh, 3 lakh 25, 2 lakh 50. What is the equity shares? Now, to issue 25,000 equity shares. Option 1, 25,000 equity. Option 2, there is a debenture, no equity. Option 3, there is a preferences, no equity. Now, only in the option 1, you have equity shares of 25,000 equity shares. Old equity shares is how much? Old is 30,000 equity. Old is 30, new is how much? 25. 30 plus 25, how much? 55. First option, 30 plus 25, 55. Second option, 30 plus 0. Third option, 30 plus 0. You will get 30,000 and 30,000. Now, so your 4 lakh divided by 55, 3 lakh 25 divided by 30, 2 lakh 50 divided by 30, 10.83, 8.83. Conclusion, your EPS second alternative because it gives you 10.833. Returns are more. Hope you are clear. Yes. So similarly, we'll go for second one, dividend decision. Again, 15 mark question. Under dividend decision, you have two methods. One is Walter's method, other one is Gordon's method. Now, as per Walter's method, what we have to do? As per Walter's method, remember, these are the information we have. Now, 15%, 5% and 10%. These are rate of returns. So, your problem you have to find out as per rate of return. Problem number 1, problem number 2, problem number 3. Always your cost of equity will be common and earning will be common. Now, which method you are doing? Walter's formula. You are doing for what? Walter's formula. And what are the dividend? 50%, 75%, 25% is your dividend. We'll go for Walter's formula. Yes. First, we'll do it for 15%. How to do for 15%? I'll show you. So, you are doing for what? 15%. Rate is what? 15. Earning is 8. Cost of equity 10. Now, what are your dividend? 50%, 75, 25. 50%, 75 and 25. Now, what is your formula? See your formula. This has to come like this. Your line. I'll show you formula. D plus in this R E minus D divided by cost of equity whole divided by cost of equity. You have to write formula like this. Your line come up to this. Now, see in this, what is your D? D is what? Dividend. What is the dividend? 50%. What is your earning? Earning is what? 8 rupee. 8 rupee into 50% is equal to 4. 8 rupee into 75% is equal to 6. 8 rupee into 25% is equal to 2. Hope you got this. Good. Now see, wherever you have D, 8. And wherever you have R, R means what? R means your rate of return. R means what? Your dividend is 4. R means 15%, we can call it as 0.15. And 8 minus 4. 8 minus 4 means what? 8. 8 means your earning. Dividend is 4. divided by, what is the cost of equity? 10%, 0.10 whole divided by 0.10. Clear? Now, how to calculate? I'll show you. First, you calculate this. 8 minus 4, how much? 4. Then you calculate with this. 4 into 0.15. Then you calculate like this. Divide by 0.10 plus 4. Clear? Again, I'll repeat. In your calculator, please take calci. In the calci, what you have to do? First, you have to do 8 minus 4. 8 minus 4. Clear? After that, multiply with 0.5 into 0.15. Then divide by 0.10. Divide by 0.10. Then plus 4. Plus 4. Divide by final answer 0.10. I got 100. Hope you are clear. This is a procedure you have to follow. Now, this is done. Come to second one. Second one, what happens? Everything is same, but dividend is what? 75% means 6 rupee. Wherever D comes, we should write 6%. 6 rupee. Now, in this line has to come up to this, and this is whole divide. Hope you're clear with this. Now, so all the calculations are done. So similarly, this also I'll show you again. First 8 minus 2, then multiply with this, then divide with this, then you add 2. Whole divided by 0.10. You will get 110, 70, 100. Clear? Yes. Now, so we're done with 15%. 5% is a homework for you. You have to work out. I'll go with 10%. 10% same thing. I have taken rate. R is equal to 10%. Yes. Yeah. 10%. The dividend, the cost of equity, everything will not change. Your final answer is 80, 80, 80 for this. So this is called as your dividend decision under Walter's model. Now, again, remember the formula, very important it is. The line should come up to this, and this line should come up to this. Now, the next part is the same dividend decision, but we go for Gordon's model. But in your examination, 99% you can expect this one, your Walter's model. So, there may be chances of getting Gordon's model also. Under Gordon's model, you have dividend payout ratio, retention ratio, cost of equity. Remember, some problem they will not give you retention ratio. If retention ratio is not given, then what to do? Remember, 100 minus dividend. That is only retention. 100 minus 10. Your dividend is how much? 10. How much you got? 90. 100 minus 20. 80. 100 minus 30, 70. 100 minus 40, 60. 100 minus 50, 50. So like this, you are supposed to calculate. From 100, if you minus your dividend, you will get your retention. If it is not given, you have to find out this. This retention, we call it as B. This retention, we call it as B. Cost of equity is already given. 20%, 19, 18, 17, 16, 15. 14. These are cost of equity. Then there is a formula for this. Remember, there is a bracket here. E1 minus B, cost of equity minus B into R. Now, P for price of the share, E for earning, B for retention, R for ratio, cost of equity, K for cost of equity. Now, see, you have in the question 10, 20, 30, 40, 50, 60, 70. 10, 20, 30, 40. I don't have space here. That's why 50, 60, 70. Clear? Yes. Now, write down the formula. Now, in the formula, first one is what? E, earning. As per question, earning is how much? 20. So, written earning is 20. Then after this 1 minus B. Now B is what? 90%. 90% we can call it as 0.90. Cost of equity 20%. Return is 12%. Clear? Yes. See, here 1 minus D. D is how much? 90%. And then this one must be with comma. Remember, this one must be with comma. And so 0.90 into 0.12 minus 0.20. 0.80 into 0.12 minus 0.19. 0.70 into 0.12 minus 0.18. 0.60 into 0.12 minus 0.17. These are the calculation we are supposed to do. Hope you are clear. Yes. So if you simplify like 1 minus 0.90, you will get 10 paise. 10 paise into 20, you will get 2 rupee. Do all this calculation, multiply and minus, you will get 0.092. Divide, you will get 21.74. Similarly, you do it for 10, 20, 30, 40, 50, 60, 70. Clear? Later you can take screenshot, but just understand the concept. Now, we'll go for conclusion we have to give. So it is cost of equity is 10% and your capital, cost of capital is 15%. It is more than your cost of capital. Then leverages. Leverages, remember we have 3 types of leverages. One will be operating leverages. Second one, financing. And the third one, combined. So what is operating? Remember, while calculating your operating, financing and combining, you have to remember this, the formula before that. Sales minus variable cost, you will get contribution minus fixed cost, you get EBIT minus interest, you will get EBT. If you want, you can minus tax also, you get earning or profit after tax. Clear? This is a concept. Now, as per this, what is your sales here? 10 lakh. What is your variable cost? 6 lakh. 10 minus 6, it is 4 lakh. So you got contribution. Contribution minus fixed cost, your EBIT. Your fixed cost is 2 lakh. So your EBIT is 2 lakh. Interest. See, 10 lakh loan you have taken on 8%. It will be how much? 80,000. So 80,000 interest. 2 lakh minus 80, 1,20,000. Just assume that tax rate is 50%. Now, so 1,20,000 minus 50%, it is 60,000. So it will be 60,000. Hope you are clear. Good. This is all about your calculation. Once you're done with your calculation, now we will calculate what is operating, financing, combining. Now, I'll go with operating. Operating. Now, contribution divided by EBIT. What is your contribution? The contribution is 4 lakh. Divided by EBIT. What is your EBIT? 2 lakh. Your answer is 4 lakh divided by 2 lakh. 2 times. Hope you are clear how to calculate your operating contribution divided by EBIT. 4 lakh divided by 2 lakh. It is 2 times. Similarly, if you go for financing leverage. Financing financing leverage EBIT divided by EBT. What is your EBIT in this? I'll go for that. Your EBIT as per this 2 lakh. And your EBT as per this 1,20,000. What is your answer? I'll go for the 2 lakh divided by 1,20,000. So 2 lakh divided by 1,20,000. So I got around 1.66. 1.666 we got answer. Hope you are clear. Yes. Once you done with your finance cost, what is the last one? Combined. Combined how to do? I'll show you. Combined is the easiest one. Combined leverage. Combined, it is nothing but operating into financing. What is your operating in this? 2 times. What is your financing? 1.666. What is your answer? 2 into 1.666. 2 into 1.666. I got 3.332. 3.332. Hope you are clear. Good. We got 3.332 is your answer. Operating is over. Financing is over. Combine also over. Any doubt? No doubt. Now, sometimes this is only your question actually. Sometimes they may ask you. I'll show you that. So the chances are very less, but they may ask you what is that? That is ROCE. ROE. Return on capital employed, return on equity shares. Return on equity or return on capital employed. What is the formula? Very simple. Your final answer, earning divided by equity plus debenture into 100. This one, earning divided by equity into 100. In this problem, they have not given equity. If it is given, for example, debenture is given 10 lakh. Assume that equity also given some 8 lakh. Assume that equity is given 8 lakh. What we will do? Your earning is how much? 60,000. 60,000 earning divided by equity plus debenture. 10 plus 8, 18 lakh into 100. 60,000 into 18 lakh into 100. In this, we take only equity. 60,000 divided by 8 lakh into 100. That's it. Clear? Other than this, they will not ask you anything in leverages. Clear? Yes. So I'll go little fast. Actually, it is the easiest topic. Your capital budgeting. Now, under capital budgeting, your investment is 10 lakh. This is your 15 marks sure question. 10 lakh and will have a life of 5 years. No salvage. Rate of tax 50%. Depreciation under reducing balance method of 20%. CBDT, very important. CFBDT and CBDT both are same. Sometimes they will give you cash flow after tax, CFAT, cash flow after tax. Then what you have to do? Just you have to add depreciation and do the problem. Clear? I'll tell you how it is now. So in this, what they have given cash flow before depreciation tax. Before depreciation means you have to minus depreciation, minus taxation, again add back depreciation. Clear? I'll show you how it is. Now, all these are given. Now, you calculate NPV, ARR, payback and profitability. These are the PV factors they have given. Now, see, whatever they have given, we have written. Then, depreciation, it is like reducing. What is your investment? 10 lakh. 10 lakh is your investment. 10 lakh into 20%. How much it is? 2 lakh. 10 lakh minus 2 lakh, you get 8 lakh into 20%. 1,60,000. 8 lakh minus 1,60,000, you will get 6,40,000 into 20%. 1,28,000. Like this, you have to keep on doing for all 5 years. The 5th year, whatever left out, that is full is depreciation. Because at the end of 5th year, the value, the life of the asset closes. End of the year, whatever you get, that is only depreciation. Now, write down all the depreciation. Your question minus depreciation, you will get profit before tax. Then minus taxation, you will get profit after tax. You have to total this. If you total this, how much you will get? 1 lakh, 2 lakh, 3 lakh 20, 3 lakh 94, 5 lakh 50,000 you will get. Only this column you are supposed to total. Then depreciation is over. Net cash flow also over. How to do? Whatever depreciation is deducted, we will add back. Whatever depreciation deducted, we will add back. Added all. Your final answer, this plus this, 2,60,000. I have given everything. How did you get all the answers? Clear? What number should be added? What number should be deducted? Everything is given in the question itself. Now, once you are done, go for net present value. How to find out net present value? Write all 5 years. Write your PV factor. What is your answer? 2,60,000, 255, 259, 3,01,000, 474. Add everything. Everything is added. So if added, multiply 0.9 into 2.6. If you add everything, you will get 11,42,050. Once you get 11,42,050, from that you minus 10 lakh. Final answer is 1,42,050. This is your NPV. See, your investment is 10 lakh, but your income is 11 lakh. It is a positive. Clear? Once you got NPV, next one is what? Profitability Index. Second one. Your answer is how much? 11,42,000. You have deducted, but here you will not deduct, you will divide. 11,42,000 divided by 10 lakh, you got 1.42. Into 100 will not come for profitability index. Now, so profitability index is more than 1 because if you spend 1 rupee, your income will be 1 rupee 14 paise. Now, and last one, evaluate the project according to NPV 10%. Yes, it is done. So this is all about your NPV. Hope you got NPV. Now, profitability index is more than therefore. So here it is, if you spend 1 rupee, you will get more than 1 rupee. It is profitable. Now, the next one, ARR and payback period. It is not done. We will do it now. See, in the question, we are supposed to do NPV, ARR, payback, profitability index. Profitability index is done. Your NPV is done. ARR and payback period we are supposed to do. Now, as per this, I'll go with ARR first. What is the formula of ARR? Average profit divided by average investment into 100. What is the average profit? See, yeah, profit is 5,50,000. You take average of 5 years. 5,50,000 divided by 5. 1,10,000. 1,10,000 divided by. What is the average investment? Your investment is 10 lakh. While taking average divided by 2. So it will be 5 lakh into 100. You will get your answer 1,10,000 divided by 5 lakh into 100. I got 22%. Your answer is how much? 22%. Hope you are clear. This is called ARR. If your ARR is as per this problem, What is your PV factor? 10%. NPV factor 10%. If your ARR is more than 10%, it is positive. Now, once if it is done, what is the next procedure? Payback period. So, payback period. How to find out payback period? Easiest one, I'll show you. What is your answer for C? Your, as per this, the last answer you have to take. 2,60,000, 255, 259. 2,60,000, 259,000, 255, 259. 255, 259, 3,01,200, 4,74,800. 4,74,800. So this is your net cash flow. Now we have find out cumulative cash flow. What is this? Cumulative cash flow. So just we have to add back. First year it will be 2,60,000. Cumulative means adding 2,60,000 plus 255. 2,60,000 plus 255. It will be 5,15,000 plus 259. 7,74,000 plus 3,01,200. 10,75,200. 10,75,200 plus 4,74,800. It is 1,55,000. Now, you got all the answer. Now, what is your payback period means? You have invested 10 lakh. Will you get it in the first year? Your 10 lakh you cannot get. Second year, no. Third year, third and fourth. In between these two, you will get back your 10 lakh. That is only payback period. 7,74,000 you got. Still how much you need? Like 7,74,000 minus 10 lakh. And difference between third year and fourth year. 7,74,000 minus 10 lakh. 75,200. So how much we will get? See. So 7,74,000. 7,74,000 minus 10,75,200. 10,75,200. I got around 3,01,200. 3,01,200. And 7,74,000 minus 10 lakh, how much? 2,26,000. If you calculate, how much you will get? 2,26,000 into 100 divided by 301,200. I got around 75%. Yeah, 75. So 1, 2, 3 years, 3.75. You will not get 3.75. You will get only how much? 0.75. 3 first year, second year, third year, 3 plus 0.75. It will be 3.75. Hope you are clear. This is all about payback period. So before I'll go to thank you slide, just I wanted to discuss about, so what are the things you will get for theory? Now, so in the theory, you can discuss about, I'll come back to your first slide. Yes, theory what you can write. See, in theory, for 15 mark, 10 mark and 5 mark, one will be what is financial management, features, objectives, functions of financial manager. There is a first question, very important. Next, Sources of finance. Sources of finance. Long term and short term. So, third one, determinants of capital structure. And fourth one, what is cost of capital? Then fifth one, types of dividend are methods of dividend. Clear? These are the thing, major one for 15 or 10 marks. Clear? And 5 mark they may ask you anything. What is payback period? For 5 mark, what is payback period? What is ARR? What is IRR? What is your NPV? And so like this, these kind of questions you may get. What is leverages? These are 5 mark theory question. Clear? So motives of holding, that is FM2. So these are the topics you may expect for 5 marks theory. Now I'll go back to every slides. Please take screenshot. So your agenda, syllabus, blueprint, question number 1, capital structure, dividend decision second method, leverages, problem, your capital budgeting problem. So this is all about your today's session. Hope you understood. And we have not discussed about cost of capital, major topic actually. So we don't have enough time. That's why it is there in the YouTube classes. Please watch. There is a WACC table is there, weighted average cost of capital. Major one, please work out that. And we have not discussed about NI and NOI approach. That is also major topic. It is there in the YouTube classes. Please watch those. And time value of money, small topic like present value, future value, loan amortization. These 3 concepts, we have done many classes on this on YouTube. Please do watch that. And rest of the things we covered in today's session. I hope you make a best use of this video, and all the very best. Share this video as many as possible. So help others too. Thank you.